In a dramatic turn of events, the cryptocurrency market has been sent into a tailspin following the announcement of a proposed national crypto reserve by former President Donald Trump. After an initial surge in prices over the weekend, optimism quickly faded, leading Bitcoin to lose nearly $10,000 in value, plummeting to approximately $83,800. The proposed reserve, which aims to utilize taxpayer funds for acquiring cryptocurrencies, has sparked a wave of skepticism among lawmakers and investors alike. The concept was first laid out during Trump's campaign last summer, where he envisioned a federal stockpile of Bitcoin and appointed venture capitalist David Sacks as the crypto czar. The plan, however, has been met with significant backlash. Critics point to the impracticality of such a reserve, which would involve the government purchasing an estimated 200,000 Bitcoin annually over 5 years at a projected cost of $90 billion. Funded partially through the Federal Reserve surplus. "There's nothing strategic or sensible about this idea," remarked Ishwar Prasad, an economist at Cornell University, highlighting the inherent risks of using taxpayer money for what many view as a speculative investment. The proposal raises critical questions regarding its funding and the potential involvement of taxpayer dollars. While Trump's administration insists that no tax or spending program has been formally announced, concerns remain that ordinary Americans could bear the financial burden of supporting this initiative. Supporters of the plan argue that profits from the reserve could be used to alleviate the nation's staggering $36 trillion debt. However, critics fear that this reliance on volatile digital assets could exacerbate the fiscal challenges facing the U.S. government. Critics like economist Stephen Cecchetti have denounced the idea of a crypto reserve as absurd, arguing that it deviates from the traditional purpose of a strategic reserve, which is to stabilize essential resources during crises. Unlike oil or medical supplies, Bitcoin's value is not inherently linked to national security, leading many to question its necessity in a government context. What exactly is essential about Bitcoin in our lives? Cecchetti questioned, pointing out the speculative nature of the cryptocurrency market. Moreover, the inclusion of lesser-known cryptocurrencies such as ADA and XRP in the proposed reserve has raised eyebrows as many crypto enthusiasts express concern over the potential for scams and insider trading. The recent trading activity surrounding Bitcoin, including a $200 million bet made just hours before Trump's announcement, suggests that the reserve might become a breeding ground for such practices. Despite the skepticism, Trump's plan has ignited a broader discussion about the future of cryptocurrencies in the U.S. Several states are exploring their own versions of a strategic crypto reserve, with Oklahoma recently advancing a proposal out of committee. Advocates for these initiatives argue that even if many proposals fail, the introduction of one successful reserve could pave the way for broader acceptance of cryptocurrencies at the state level. As the situation unfolds, the upcoming cryptocurrency summit at the White House on March 7 is expected to shed more light on the details of Trump's proposal. Meanwhile, the uncertainty surrounding the government's potential role in the cryptocurrency market leaves many wondering how this initiative might reshape the landscape of digital assets in the future. Whether this bold plan will materialize or fizzle out remains to be seen. But one thing is clear. The crypto market is bracing for further volatility as it navigates the implications of government involvement in a space historically characterized by its independence. In a surprising turn of events, President Donald Trump's announcement of a proposed U.S. strategic crypto reserve has triggered significant backlash from his once enthusiastic supporters in the tech and crypto communities. This proposed reserve, which would include major cryptocurrencies such as Bitcoin, Ethereum, XRP, Solana, and Cardano, has raised eyebrows and skepticism, leading to a notable decline in cryptocurrency values as optimism wanes. On Sunday, Trump took to his social media platform Truth Social to unveil his plan, which aims to position the United States as a leader in the global cryptocurrency landscape. The announcement initially caused a surge in crypto prices, with Bitcoin rising by as much as 8% and Ethereum seeing similar gains. This seemed to reflect the market's enthusiasm for the potential of a federal backing for digital currencies. However, as details became clearer, the excitement quickly turned into apprehension. Critics, including prominent figures within the cryptocurrency space, expressed deep concerns about the inclusion of multiple digital assets in the strategic reserve. Tyler Winklevoss, a billionaire Bitcoin investor, succinctly stated, "I do not think they are suitable for a strategic reserve," emphasizing that only Bitcoin meets the necessary criteria. This sentiment was echoed by other leading voices in the industry, who feared that the government's foray into cryptocurrencies could compromise the decentralized ethos that underpins digital currencies. The announcement has not only raised questions about the assets selected for the reserve but also about the potential implications for government spending and taxpayer money. Many in the crypto community worry that using public funds to purchase volatile cryptocurrencies could amount to a transfer of wealth to a select group of investors. Joe Lonsdale, a vocal Trump supporter and venture capitalist, articulated this concern, calling it wrong to tax me for crypto bro schemes. David Sachs, appointed as Trump's AI and crypto czar, attempted to temper the backlash, insisting on social media that no new taxes or spending initiatives had been announced. However, many remain unconvinced, fearing that the reserve could lead to further government intervention in a market that many believe should remain free from such influence. Economic experts have also weighed in, with some labeling the concept of a strategic crypto reserve as fundamentally flawed. Stephen Cecchetti, an economist at Brandeis International Business School, dismissed the idea as absurd. He argued that purchasing risky assets in hopes of repaying national debt is akin to gambling, a sentiment that resonates with critics who fear the volatility of cryptocurrencies. "It's foolish to purchase risky assets with leverage in the hope of making it easier to repay your debt," he stated. As the crypto market responded negatively to the announcement, Bitcoin fell approximately 9% by Monday afternoon. This decline coincided with Trump's confirmation of impending tariffs, further exacerbating the drop in risky assets. The market appears to be in a precarious state, with analysts urging the need for solid regulatory frameworks and clearer signals from the Federal Reserve to stabilize prices. Despite the criticism, some voices within the industry maintain optimism regarding the strategic reserve plan. Michael Saylor, chairman of MicroStrategy, suggested that the initiative could ultimately be beneficial for Bitcoin and the broader U.S. crypto industry. "There's no way to interpret this other than this is bullish for Bitcoin and bullish for the entire U.S. crypto industry," he remarked. As the date for Trump's first White House Crypto Summit approaches, it is evident that the conversation surrounding the proposed reserve will continue to evolve, with states like Oklahoma, Utah, and Arizona exploring their own strategic reserve legislation. The implications of such policies could ripple across the nation, as the administration prepares to clarify its stance on this contentious issue. The future of the proposed crypto reserve remains uncertain. The tension between government involvement and the decentralized nature of cryptocurrencies will likely provoke further debate in the coming weeks, shaping the landscape of digital assets in America. In a surprising twist in the realm of digital currency, President Donald Trump has unveiled plans for a crypto strategic reserve, a move that could significantly reshape the landscape of cryptocurrency regulation and investment in the United States. Announced via Truth Social on Sunday, the initiative will enable the federal government to actively engage in the buying and selling of cryptocurrencies, aiming to position the U.S. as the global leader in the crypto economy, a pledge Trump made during his 2024 presidential campaign. The proposed reserve is set to encompass 5 prominent cryptocurrencies: Bitcoin, Ethereum, XRP, Solana, and Cardano. This announcement triggered a surge in the market value of these digital assets, with prices spiking dramatically before experiencing volatility in subsequent trading days. As of now, the U.S. government reportedly holds around 200,000 Bitcoin, primarily seized through law enforcement actions, valued at approximately $17 billion. However, the mechanics of how this new reserve will be funded and managed remain unclear. While the concept of a strategic reserve is not new, historically utilized for essential commodities such as oil and medical supplies, economists are raising eyebrows at the idea of treating cryptocurrencies in the same manner. Critics argue that cryptocurrencies are inherently volatile and speculative, making them ill-suited for a national reserve aimed at stabilizing or enhancing economic security. Ishwar Prasad, a trade policy professor at Cornell University, noted, unlike gold, which has intrinsic value, Bitcoin's newness and volatility present significant risks. He cautioned that the U.S. might inadvertently become a major player in a market prone to dramatic price fluctuations. The announcement has garnered mixed reactions from the crypto community. Some enthusiasts believe that a Federal Reserve could legitimize and stabilize the market, potentially attracting institutional investors and other governments to follow suit. However, others express concern over the implications of government involvement in a decentralized currency space. Prominent figures within the crypto sector, such as Coinbase CEO Brian Armstrong, have suggested that focusing solely on Bitcoin might be a more prudent approach given its status as the most established cryptocurrency. In the political arena, Senator Cynthia Lummis has introduced legislation advocating for a strategic Bitcoin reserve, proposing the government acquire 1 million Bitcoins over 5 years. However, the notion of using taxpayer dollars to fund such a reserve has raised alarms among critics who fear it could lead to a misallocation of public funds benefiting private investors. As the cryptocurrency market reacts to this announcement, it faces broader economic challenges. Following Trump's initial announcement, Bitcoin and other cryptocurrencies experienced a sell-off driven by concerns over impending tariffs and macroeconomic uncertainties. Analysts emphasize that while the potential for a U.S. crypto reserve could drive prices up in the long term, the immediate impact may be overshadowed by these larger economic factors. Looking ahead, all eyes will be on the White House's inaugural crypto summit scheduled for March 7, where more details about the reserve and the administration's overall stance on cryptocurrency regulation are expected to be unveiled. As Trump's administration navigates these uncharted waters, the future of digital currency in America hangs in a delicate balance between innovation and regulation. The outcome could very well determine whether the U.S. solidifies its position as a leader in the global cryptocurrency market or falls behind as uncertainty looms. In a significant announcement that has sent ripples through the cryptocurrency market, U.S. President Donald Trump revealed the inclusion of 5 digital assets in a proposed U.S. crypto strategic reserve. On March 4, 2025, Trump took to social media to disclose that the reserve would consist of Bitcoin, Ethereum, XRP, Solana, SOL, and Cardano ADA, a move that initially spiked the market values of these cryptocurrencies. Bitcoin surged to approximately $90,828, while Ethereum climbed to around $2,409, reflecting gains of 8% and 8.3% respectively. Trump's directive comes on the heels of a January executive order aimed at bolstering the U.S.'s position in the global cryptocurrency landscape. He stated, "I will make sure the U.S. is the crypto capital of the world," emphasizing the administration's commitment to fostering a favorable environment for digital assets. The announcement coincides with a notable resurgence in interest from the crypto industry, which had previously faced regulatory scrutiny under the Biden administration. However, the excitement generated by the announcement was fleeting. Despite the initial market uptick, the broader cryptocurrency landscape faced declines, with Bitcoin's price later dropping to around $84,148, marking a 9.48% decrease, in Ethereum falling to approximately $2,103, a 13.91% decline. Analysts attribute the volatility to a combination of macroeconomic pressures, including new tariffs imposed by the Trump administration on key trading partners such as Canada, Mexico, and China, as well as a rising sentiment of caution among investors. The cryptocurrency market, which had seen a global capitalization of about $2.76 trillion, was down by over 10% within a 24-hour period, illustrating the inherent volatility of digital assets. Cardano ADA, however, stood out as a top gainer, rallying nearly 60% following its inclusion in the strategic reserve, showcasing the potential for positive sentiment amid broader market turmoil. The strategic reserve setup remains ambiguous, with experts divided on whether congressional approval will be necessary. Some argue that the U.S. Treasury could utilize its Exchange Stabilization Fund to facilitate the stockpile, while others suggest potential use of cryptocurrencies reclaimed through law enforcement actions. As the market grapples with uncertainty, attention turns to the upcoming White House Crypto Summit, where Trump's administration is expected to present further details on its crypto strategy. The event could provide clarity on how the strategic reserve will be operationalized and the regulatory framework that will govern the burgeoning digital asset landscape. In the wake of these developments, analysts are keenly observing market dynamics. The recent price fluctuations highlight the crypto market's sensitivity to external economic factors and regulatory signals. If the U.S. Federal Reserve indicates a shift in interest rate policy, it could rekindle investor interest and stabilize prices. Meanwhile, the efficacy of Trump's crypto policies will be critical in shaping the future landscape of digital assets in the United States. As the cryptocurrency sector continues to evolve, the interplay between government policy, market sentiment, and global economic conditions will be pivotal in determining whether digital currencies can maintain their momentum and further entrench themselves as mainstream financial assets. The coming weeks will undoubtedly be crucial for investors and stakeholders alike as they navigate this volatile yet promising terrain. In a surprising turn of events, former President Donald Trump's recent proposal to establish a strategic reserve for cryptocurrencies has ignited discussions among analysts and investors regarding the future of exchange-traded funds ETFs centered on altcoins such as Cardano, XRP, and Solana. While the move has been met with both enthusiasm and skepticism, it underscores the increasingly complex landscape of digital assets in the United States. Trump's suggestion to include specific altcoins in a strategic reserve alongside more traditional cryptocurrencies like Bitcoin and Ether has led many to speculate that this could facilitate the approval of ETFs that incorporate these tokens. Jonathan DeWitt, Chief Investment Officer at ZeroCap, commented, "Including XRP in a strategic reserve strengthens the case for XRP ETF applications by helping to resolve some key regulatory concerns." This sentiment reflects a growing belief that the endorsement from a high-profile figure such as Trump could lend credibility to these cryptocurrencies, making them more appealing to institutional investors. However, not all experts share this optimism. Luke Nolan, a research associate at CoinShares, cautioned that Trump's announcement lacks a concrete timeline for implementation, suggesting that any proposal would still need to navigate the legislative process in Congress. "We are assuming a bill of some sort would have to pass through Congress, and in my view it's unlikely that the reserve will look exactly as proposed," Nolan noted. This sentiment was echoed by Zach Burks, CEO of NFT marketplace Mintable, who dismissed the proposal as lacking substance, stating that tokens like ADA and XRP are completely worthless for the U.S. and unlikely to be part of any strategic reserve. Despite the uncertainty surrounding Trump's proposal, the Securities and Exchange Commission (SEC) is currently reviewing applications for ETFs that involve these altcoins. Mariam Habibi, Chief Revenue Officer at BitPace, expressed optimism that Trump's call for a reserve could expedite the approval process for these funds, which could provide a much-needed boost to the struggling crypto market. Following Trump's announcement, the crypto market initially rallied but has since experienced significant downturns due to external economic pressures, including fears of inflation stemming from a trade war with U.S. allies. As the market grapples with volatility, some analysts remain hopeful. Raoul Pal, founder of Real Vision, predicts that the current crypto cycle may extend into 2026, driven by improving financial conditions and a weakening U.S. dollar. He argues that despite recent corrections, such as Solana's staggering 53% drop, these fluctuations are typical in a bull market and present potential buying opportunities. Solana should outperform Bitcoin for the rest of this cycle and Ethereum too, Pal stated, highlighting the importance of patience amid market turbulence. The interplay between Trump's proposed reserve and the SEC's decisions on ETFs could have lasting implications for the broader cryptocurrency ecosystem. As the crypto market continues to navigate regulatory challenges and economic uncertainties, the future remains uncertain. However, investors and analysts alike will be closely monitoring developments in the coming months, particularly as discussions around cryptocurrency policies evolve and as the potential for ETF approvals looms larger on the horizon.